Here's how to lock in an interest rate lower than what your mortgage broker is actually quoting you. At the moment, it's tough to be a home buyer. Rising interest rates, a recession looming, crash talk everywhere. But at the same time, that can lead to opportunities in the market, especially with homes that have been sitting on the market for any extended period of time. In today's video, we're going to tell you how to use the seller's money to actually buy down your interest rate so you as a home buyer actually benefit by having a lower monthly payment. In fact, there are two different strategies that we're going to talk about in today's video. The first is a seller buy down. The second thing we're going to talk about is a 2-for-1 buy down. In both of these examples, we're using the seller's money to pay discount points and actually buy down the interest rate, which in turn is going to lead to a lower monthly payment for you as a home buyer. Now, one thing I want to point out up front when talking about discount points and paying down points is that these are sunk costs. Once you put them into the loan, buy down the rate, whether it's your money or the seller's money, that money is gone. So if you end up refinancing in just a couple of years, then it could end up being a waste. So if you're a believer that interest rates are going to be lower in the future, then you may not end up using this strategy. But for those that have been priced out of the market, maybe you could afford a home just a couple of months ago and now you no longer qualify, or maybe you're looking at the payments going, the payments have gone up way too much, but I still want to buy a home. Well, then this is a strategy you can employ in the short term to help get past that sticking point and actually get into a home. Now, for those of you wondering what I'm talking about when I'm talking about points, it's a percentage of the loan amount. So 1 point equals 1% of the loan amount. So if you have a $300,000 mortgage, for example, 1 point is actually $3,000 in that example. But one thing to keep in mind when you're actually buying down discount points, if you're buying 1% worth of discount points in this example for $3,000, that might lower your interest rate by 1/4%. So to get a full point lower on your interest rate, you might have to actually pay down 4 points in order to make that happen, which in this example that we used of a $300,000 mortgage, that's roughly $12,000. And most homeowners don't want to come up with that money out of pocket. A lot of homeowners don't have that money to buy down the interest rate. So the strategy that we're talking about today is using the seller's money to do it. Because homes are sitting on the market longer, sellers are starting to reduce prices, we're going into a slower time of the year on top of a slowing housing market to start. More and more sellers out there are willing to negotiate. They're willing to reduce prices. They're willing to do credits for buyers. And that in turn can help benefit you if you're actually looking to buy a house right now. So one example that I've used recently is that if you had a $500,000 home, you could ask the seller for a $20,000 credit versus a $20,000 reduction in price. Now for you as the home buyer, you're thinking, how does that benefit me? I'm paying a higher price and just getting a credit. Well, you can actually use that credit to buy down the interest rate. And as of today, it would save you about $300 per month by buying down that rate versus only $120 per month if you just got $20,000 off the asking price. So you'd still be financing $480,000 in that example, and that only saves you $120 a month. Now, ideally, you'd rather get the home at a lower price because your property taxes are going to be based off of that. And at some point in the future, if you can refinance that property, having a lower loan amount is obviously going to benefit you. But in my experience, most home buyers out there are more worried about the housing payment than they are the housing price. And this is a strategy that you can use to walk away with a lower monthly payment. Now, in this case of using the seller buy down, this is a permanent buy down. So if you get a 30-year fixed mortgage, your 30-year fixed mortgage is going to keep this rate for the entire 30 years, which means whatever you buy that rate down to, whatever payment is associated with that, you're going to have that for the full 30-year period. But the second strategy that we're going to talk about here in just a moment is called a 2-1 buy down. They also have others like a 3-1 buy down or a 1-0 buy down. And essentially what you're doing in this case is the same strategy. You're asking the seller for money towards closing costs to end up buying down the rate. Now, in this case, on a 2-1 buy down, for example, when you're buying down these points, this strategy looks a little bit different because the first year, your interest rate is going to be lower by nearly 2%. So if today interest rates were sitting around 6.25%, by doing a 2-1 buy down, for the first year of your mortgage, your interest rate is going to be based off 4.25%. And then the second year, it's actually going to go up 1% and be based off 5.25%. And then third year, it's going to move back to whatever the rate was at that time. Now you might be looking at this, how does this benefit me because I'm going to end up at the same rate? Well, in the short term, it allows you to get into the property and have that lower monthly payment. And if you're someone that believes interest rates are going to go lower in the future, then this is an opportunity to buy the house now and refinance at a lower rate at that time. But here's something I want you to understand. You shouldn't be buying a house at the moment with the idea that interest rates are going to go lower in the future and that you're going to be able to refinance. If you're not comfortable making the monthly payment now, if you're completely stretching yourself with the idea that, hey, yeah, I think interest rates are going lower and I'm going to be able to refinance, then I can afford it, then you shouldn't be buying at all. Now, I do believe at some point in the future, interest rates are going to pull back. There is going to be an opportunity to refinance to a lower monthly payment, but I can't tell you if that's going to be 6 months, 18 months, 3 years from now, which means in the short term, you have to be comfortable making that monthly payment. Now, there's probably a lot of people watching this video saying, why would the seller even give me a credit? Well, I want to tell you from an agent's perspective, a realtor that deals with listings all the time. These are conversations I'm having with my clients that have homes on the market at the moment. We're talking about doing strategies like this. Hey, we should offer a credit to buyers to help reduce their interest rate so it makes the payment more affordable. So there's a lot of agents having these conversations. There's a lot of sellers out there that understand and actually are prepared to hear this because they know how much monthly payments have been affected with interest rates doubling in just the last 10 months. And if a seller currently has their house on the market, then they're probably a real seller that wants to negotiate. If they want to sell their home, they're probably willing to negotiate and do things like offer you a credit in order to help you buy down your rate. But with that said, I'd love to know your thoughts. What do you think about these buy down strategies? Should you use the seller's money, or is it better just to lower the monthly payment, take the higher payment for now, and end up trying to refinance in the future? Or should you just not be buying a house right now? Let me know in the comments below. And also keep in mind, this is a strategy that you can use with new construction, with builders. In fact, because there's so much new construction currently on the market, more and more homes being built, there's an excess supply in many markets out there. There's a lot of new construction, a lot of builders out there that are more and more willing to offer incentives like these to potential buyers. So I would tell you at the moment, even if you're under contract, this might be something that you discuss with a builder to see if they're willing to offer this incentive. I'm sure they'd rather keep you as a client than you back out of the deal and end up trying to find someone else to buy a home. So understand at the moment, there are options out there for you as a buyer. You just have to take advantage of them.